Anthony is presenting the Solmar St. Pete Opportunity Zone Fund. It's a Class A 266 unit, 18-story ground up high-rise development located in downtown St. Petersburg, Florida. There he is. Anthony, how you doing?
Great. How are you doing today, Jimmy?
Good. We got a big crowd here today for you. So without further
Excellent.
ado, you can begin your presentation. You have a 20-minute presentation on Solmar St. Pete, I believe is what you're presenting today. Is that right?
That's right. That's right. Well, thank you everybody for the opportunity today to tell you a little bit about our project Solmar St. Pete. I'm so happy to be here. And what I wanted to mention to folks is Jimmy's OZ Pitch Day has been a tremendous help in the industry. And I was on the other side of this just a few years ago, looking for my own opportunity zone opportunity to invest because I had a capital gain coming in. I'm going to just talk about a little bit about our team, why invest in St. Petersburg, Florida, about our project, and what makes us different today. So just a little bit about us. I myself, I started off as a consultant with McKinsey and Company, and then wound up doing an internet startup during the first dot-com boom, took that company public, and then I wound up switching over to real estate development back in 2001. I was working on different types of multifamily projects, particularly one that's a low-income housing tax credit project. It's a little bit complicated. And so, kind of fast forward 15 years, because that's on a 15-year cycle, I had a capital gain that was coming. This was 2019, and I really needed to place it by 2020. And through one of these Opportunity Zone webinars and platforms, I actually scoured the entire country, looked at every deal that was out there, and then fell in love with one developer that had checked all my boxes, and that's Sinatra and Company. And I'll tell you a little bit about them in just a second. So, just a little bit about my firm. Anchorvest is an alternative asset management firm. Jimmy talked about a little bit about different investments out there. And so we focus on a couple of different things. One of our core pillars is we have a private credit fund. We basically buy short-term developer fix and flip loans. It's more of a fixed income alternative. It generates a very, very stable yield. And so it's a very, very safe product. Our second pillar is really on real estate, and in particular, opportunity zone deals. Since I had come from the estate world as a developer myself, I understand these deals inside and out, and I have my checklist as to what I think would be the best ones, not only for ourselves to invest in, but for some of our friends, families, and investors. And then the third pillar of our company is we do a lot of advisory work for high net worth individuals, family offices. We have a bunch of celebrities that we represent. And so overall, we're doing kind of all sorts of things in alternative asset management. If you have any questions about this, feel free to reach out to me. So kind of going back to my story about the capital gain that I was placing, I was looking for a developer that actually had, number one, a great OZ deal, because these deals need to stand on their own, even without OZ benefits. So I needed to have a good real estate deal. Number two is I was looking for a firm that had been in business for quite a while, because when you actually invest in an opportunity zone project, you got to make sure that they're going to be there for the long run. These are 10-year holds. So you got to have a firm that has the history that's going to last that long. And during those 10 years, you got to make sure they have that commitment to complying with all of the OZ regs, as well as tax regs and everything else. Number three is I really wanted to find a deal that had a lot of juice in it. And what do I mean by juice? It's in addition to opportunity zone benefits, that deal had some other type of public incentive in there or some way to really increase the returns. Since I had come from the low-income housing tax credit world, I knew about public subsidies coming from cities, other municipalities, as well as the value of the tax credits. So actually, the first deal that I found, wound up investing in with Sinatra, was one that's actually in Buffalo, New York, and it was a deal where it actually combined opportunity zone benefits with brownfield tax credits, plus the fact that Sinatra at that time, back in 2020, which was kind of the early days, really understood how to take advantage of bonus depreciation, which you heard about earlier. And that really, really was phenomenal. So kind of fast forward 5 years from that investment that I've made right now, I can tell you for the amount of money that I put in, just on bonus depreciation and depreciation losses, uh, if I had put in just $100,000, I would have gotten already $200,000 of deductions. Plus, I got back over 60% of my capital through tax credits that came in just year three. So it was a pretty phenomenal deal. Kind of moving forward, I wound up then working with Sinatra on a second deal, a third deal. We've done a half a dozen opportunity zone projects now. I've become an OZ junkie, as we like to call it. So right now, one of our core businesses with Sinatra and Company, in conjunction with AnchorVest, is our OZ deals and our pipeline. So we've now built over 100 million in OZ projects. Sinatra and Company itself, they are a multifamily vertically integrated firm. They have over 4,000 multifamily units, primarily in the Northeast and in the Southeast, in particularly Florida, and over 700 million in AUM. So quite stable, great track record. Over the years, Sinatra and Company has already exited out of 3,000 units. And out of those units, they averaged over a 21% IRR. So quite impressive on returns. And the fact that the company itself has over 120 team members, about 40 of them are down in Florida. For our projects that we do down in Florida, we actually are boots on the ground and able to manage everything down there. So just a little bit about the founders. Sinatra Company is named after Nick Sinatra. Great guy, amazing pedigree, Yale undergrad, then went to Wharton for grad school. And then the CIO, Anthony Nanula, his family is the largest investor in Sinatra and Company. He comes from a long career in finance, and his family made their wealth in the supermarkets business, of which they sold back in the early 90s. And so that family also founded a leading regional home builder. So together, the experience on the team was not only very deep, but it was also very broad. Now, for this particular project for Solmar, because it is down in Florida, so far up to date at this point, Sinatra had been doing most of their OZ projects in the northeast area, particularly in Western New York. And so we together as a team, we wanted to find a good partner to help us down in Florida. At this point, we had only been doing more of those value add deals, which are basically buying older apartments, fixing them up, and eventually selling them. In this case, this is a ground up project. So we actually have a partner down here, Gemini RE, and there was a couple of great guys on the team, Tom George and Chris Samini, and they have over $1.5 billion of real estate experience doing ground up construction just like this in the Tampa and Florida area. So with a great local development partner, that helps us tremendously. We've also put together an amazing team. Here on the right, I wanted to highlight we have Baker Barrios. They're an award-winning architecture firm that's done high-rise after high-rise institutional grade projects. And then the GC on this particular deal is Vertex Construction. They actually have a couple of high rises they've built or are under construction just within blocks of this project. So lots of local experience. And for those of you who are not so familiar with real estate, it's extremely valuable that your architect and your GC know all the local city folks that where they're building. It's crucial for the success of your project. Now, in terms of an OZ project, what's also very important to know is you got to have a great legal and compliance team. Well, for this project, obviously AnchorVest we're in here, so we do a lot of the compliance work. But there's a lot of heavy lifting that's also done by the OZ lawyers. They're a critical part of the team, as well as the CPA. We have Snell and Wilmer. We have a partner named Mark Schultz. He's one of the leading thought leaders in the industry, is on the forefront of policy. And we work with the Bonadeo Group, which has decades and decades of experience in accounting, but also deep experience now in OZs, particularly with a lot of our projects over the last few years. So it's a very robust team. It's catered just for Florida. And so we're extremely happy to have our entire team in place for a deal down in St. Pete. So, talking about St. Pete, one of the things I wanted to mention first is why St. Pete? Why Florida? I'm sure a lot of you have heard about the migration to Florida, but I just want to show what's actually going on. Over the next 4 years or so, we're expecting over a million point four new 1.4 million new residents. So it's tremendous growth that's going on in Florida. You see a lot of folks from California, Illinois, New York, all moving down there. I myself am based in California. We have a lot of investors that come from New York. And what we're actually seeing, particularly for the Tampa Bay, St. Petersburg metropolitan area, is just a huge growth in businesses as well as employee growth that's moving down there, job growth, and just overall population growth. One of the things I like to point out is there was a survey done of all the top cities to start a business and to run a business. And out of the top 10, Tampa Bay, which includes St. Pete, was ranked number two. Now, beyond that, if you look at the top 10, six out of the top 10 are in Florida. And the reason for that is it's just a very pro-business state. There is no state income tax, and we have a lot going for us down there in terms of generally having a lot of land for development. Now, what I want to point out is the last few years has been a little bit tougher in the market. And so there were fewer multifamily projects that were started. So we actually saw a plunge of 74% since 2021. There's a tightening supply because there was that kind of a gap in development historically. We actually see fewer projects coming to fruition next year. So what does that mean? It means that there's going to be fewer units for absorption in the market. So rents are assumed that they're going to be and projected to be to grow 4% just in 2026. Now, overall in the market, you're going to see most municipalities, most target markets having zero growth or negative growth in the coming year. So this is quite strong for us in real estate projects. The other thing I mentioned is generally Florida has a lot of land, but when we look specifically at St. Pete, there's actually very limited land available in the downtown St. Pete area. Now, I'll show you a map in a little bit and we'll highlight that. As I mentioned, there's strong job growth. And one of the other things to remember about Florida is there's actually no rent control. Now, for an investor, for a developer, having no rent control is a true benefit for your project because that does not limit your upside. So now let me get into a little bit about the project itself. So it's a beautiful Class A luxury multifamily building. It's 266 units. It's up on 18 floors. The first 5 floors are parking. And it has all the benefits and amenities of a Class A project. So it's going to have a swimming pool, it's going to have a cafe, it's going to have all these shared spaces. We're planning to start construction in the second quarter of next year. It's going to be about just under a 2-year build. And the location is unbeat right in downtown St. Pete's. So if we take a look at downtown St. Pete, this is now from the viewpoint of west looking east. So we actually have 3 freeways bounding downtown St. Pete's and the ocean on the other side. Now, most of the development has been on the eastern half, which here is kind of the top of this illustration. And on the western half, a lot of the parcels either are smaller developments, they've been developed, or there's some type of commercial element on there. So our project, Solmar St. Pete, is tucked right here by the freeway. And there's some folks that have been saying, well, if you have the freeway next to you, is that a negative? Well, for us, the freeway is basically on the second floor, and we have 5 floors of parking. So the first residential level being at floor 6, and then above, they won't have really much impact by the freeway. And in fact, because the freeway is on this side, we'll have forever views going west and north, which is quite a nice benefit. For downtown St. Pete, really the main corridor is Central Avenue. And it goes east and west here. This is turned sideways. And so this is the whole walkable street that has all your restaurants, your stores, your museums, your nightlife. It's really the heart of St. Pete. So we're just 2 blocks away. This is less than a 3-minute walk. It's like 30 seconds if you jog it. So it's just a stone's throw away. Now, I do want to mention a couple of things that are going on in St. Pete's. As I said, there's been a lot of growth. This was historically more of a resort town, and now you just have a lot of businesses moving in. One of the biggest ones that was recently announced is for many of you that really follow investing and the VC world, Kathy Wood and her fund, they have now officially moved down to St. Pete. And so they're right here in this particular area. And she's actually gotten involved as well with the new Tropicana field development. This was a very, very active ballpark, but at this point, this is now under proposals for redevelopment. And this is going to become a large mixed use facility. It's probably going to have mostly office, retail, maybe a little bit of residential component. We're still waiting to see on that, but it's mostly going to be a lot of retail and office, which will drive even more development in the area for residential. So a couple other things is there's a historic gas plant district that's also been announced. It's going to be redeveloped. That's 86 acres. And there's just been a lot of huge projects. The Waldorf Astoria's come in. There's tons of other luxury hotels in the area. And at this point, there's just still not enough housing for the folks that want to live there. And part of that is because a lot of businesses continue to keep moving into downtown St. Pete. Folks that come visit for a holiday fall in love with it, wind up moving a little part of their business there, then eventually wind up moving the entire company there to take advantage of the tax benefits of Florida. And then you have the entire company move. So that's just driving so much growth in Florida and particularly St. Pete. So I only have a few minutes left here, but I want to do get into the numbers because when I was actually evaluating deals from OZ Pitch Day before and looking at some of these other webinars, it always comes down to the numbers. And one of the things about being in St. Pete is that the rents are so strong. You saw so much growth that I just mentioned. You have population growth, you have job growth, you have salaries growth. So because of the strong rent growth, that's what's driving a lot in terms of the returns. So for all of our projects, what we want to do and what we like to do is to calculate returns after tax because the whole benefit of the OZ program are the tax benefits. So we actually factor in both federal and state taxes. In this case, this is a projection for a New York State investor. And New York State investors, they get part of the OZ benefits. They don't get all the OZ benefits. And there's some things at the state level they don't get to take, like bonus depreciation. But what we factor in here is mostly the federal, all of the state. For us, our IRR expectation is over 20%. In this case, we're projecting 23% and a multiple close to 3.9, which is extremely attractive. You'll find a lot of other projects around the 2.5, 3, but it's because the rents are so strong here. And then we also have huge depreciation losses. As Jimmy mentioned earlier, with OZ projects, depreciation is a tremendous benefit. And the reason for that is because there's no recapture. When you usually go and invest in a real estate project, you get to take these beautiful depreciation losses each year. And once you go to sell the project, unfortunately, Uncle Sam comes back and claws back all of those depreciation losses and makes you recapture them. But the beautiful part of the OZ program is you avoid all that recapture. And to give you a sense of what the magnitude is, I'm just going to take a look at my notes here. So, for example, for a $100,000 investor, over the life of this project, we actually forecast $200,000 of depreciation losses. That's almost 2 times your investment. And those are what you're going to take mostly in the year of completion, because that's when bonus depreciation will hit. So a portion of the project will qualify for that. And then you get a little bit every year after that. So those are quite significant. And then for this project, as I said, because rents are so strong, there's actually a good chunk of rental income that comes back every year. And then finally, we have the project selling in year 10. Now, to put it into numbers once again, the benefit of having an OZ project is that you have no more capital gains at the end of the project. So no capital gain on appreciation. The impact of that for an investment on Solmar, just checking my notes, is for a $100,000 investment, you would save $130,000 in taxes on those capital gains and depreciation recapture taxes. So that's phenomenal. That's a 1.3x right there just for being in an OZ project for those 10-year benefits. So I know I'm almost out of time here. Just a couple key points is it is a 10-year hold, like all OZ projects. We're looking to complete the raise by June 30th of next year. For those of you who came to the last OZ Pitch Day, we had made an announcement of the project. We had presented the project, but we had gone back out to the market to get some more debt terms and delayed the raise just a little bit. So this is now pushed, and instead of a first quarter start, we're actually going to do a second quarter construction start. The minimum investment size on this is $100,000. And we have kind of standard fees in there. We have all the investor protections. We're huge on compliance and huge on documentation. And so, really, the benefits on this project will be those huge depreciation losses, as well as cash out refi funds, and then to sell after 10 years. So, in a nutshell, why invest in Solmar St. Pete? Number one, the premier location. As you saw, there are no more parcels left in that downtown St. Pete's area for a significant amount of similar projects. We have strong market fundamentals. We have a developer that's built tons of projects with a great local team and a local development partner. And of course, we have all the opportunity zone benefits. So Jimmy mentioned a lot of disclaimers. They're exactly what I would have said. So that's great. I'm not going to repeat any of these. And the last thing is, if you want more information, definitely reach out to me or my colleague Anthony Nanula. He's the Chief Investment Officer at Sinatra and Company. And thank you very much today.
Awesome. Thank you, Anthony. That was great. We got a couple people asking what the minimum investment amount is. I know you just stated $100,000 is your stated minimum. One person asked, is there a maximum amount that I can invest?
Yeah, so the maximum amount would be roughly about 24 million. And if you want to do that, please call my cell phone right now. I will talk to you.
We can end the call a little bit early if that's the case.
Exactly.
Let's see. We got 1 or 2 more minutes before our next presenter comes up. That'll be Josh Fair with the Wyoming Reserve. So let me ask you a couple more questions here. How competitive is the pipeline for Class A luxury multifamily properties like Solmar? That's a question that came in.
Yeah, so as I mentioned, over the last few years, rates have been pretty high, so development slowed down quite a bit. And because of that, absorption has started to catch up. And so at the time that we're going to come to market, there are not many other projects. So that we see as an advantage for us.
Good stuff. Let's see. Another question came in from Paul. Paul wants to know, he says, Anthony, do you expect that the completion will occur in 2026 and the bonus depreciation will occur in 2026?
Yeah, that's a good question. We're actually starting construction in 26. And at this point, it looks like the construction timeline, it's for first quarter of 28. So it's going to be a 2028 bonus depreciation hit onto the tax returns. So it's a big benefit for 28 taxes.
Awesome. Anthony, with that, sorry, I know we had a few more questions in the chat and in the Q&A module. We'll try to forward those on to Anthony, but for now, we're out of time for this presentation. Anthony, really appreciate your support of OZ Pitch Day. Great presentation. Thanks for being here today. Really appreciate it. Have a good one, man.
Great. Thank you.
And I'll see you in Las Vegas.
Absolutely.